Expect volatility. After starting off very, very low this morning, the bonds have recovered and they have led the stock market, which is now recovering. Does that mean that we're going to be in the green today? Oh, no, probably not. Maybe. If you know, you will win big time today. All right, let me just start off with, by the way, we'll get into all that here in a minute. I think Jamie Dimon might have turned the market this morning. Maybe it was something that Trump said. We'll cover both of those in a few seconds. Now, listen, it's gonna be Randy pontificating a little bit here, but bear with me. This is my summary of what's going on. Families with an income of 100,000 or more who own assets have been getting wealthy for the last 4 years at least. They've been gorging on the chocolate cake and ice cream supplied by the government printing press and cheap foreign goods. They've applauded the robust economy and ignored the government going to 23% of the GDP. This is very similar. It is exactly how they ignored the fraud in 2006 perpetrated by both the borrowers and the lenders before that great actual crisis. At some time, at some point, the body becomes too sick to go on. You can't keep doing it. And the body convulsed back then in 2008. And then the ambulance arrived, and we went through a very, very long recovery. This is not what we're doing right now. In 2025, a courageous president has intervened before things went completely south. And he said yesterday, we need to take our medicine. If in 2007 or 2006, George Bush, who knew that the problem existed and had gone to Congress multiple times to say that there was a housing crisis and a mortgage crisis, if he had acted like President Trump and courageously made something happen instead of just asking for something to happen, we probably wouldn't have had the crisis that we did in 2008. The government has to shrink, has to. The cheap goods are going to be a little bit more expensive from overseas. The fat and happy cake eaters like me and you probably are going to have to go on a diet. And the working stiff who doesn't own any assets and is making less than $100,000 a year, which includes most of small businesses, they're going to be the focus as the body recovers. And meanwhile, the government and the service sector that it supports will shrink. And this odd president who keeps his promises, what's with a president who keeps his promises? Will find ways to help the lagging parts of the economy to recover. Housing, manufacturing, small business, and transportation services have been in recession or even depression for the last 6 years. Now, what the vast majority of the public, I should really change that. It's really been the last 4 years, three and a half to 4 years. What the vast majority of the public, even those who do work hard to keep up, are missing in this historic moment is the addition of these two things. Robots with 2 legs and those with 4 wheels and 16 wheels are going to radically transform the world of atoms as much or even more then AI is going to change the world of electrons and information. This combination will usher in an abundance beyond the dreams of most folks. And this has nothing to do with what Trump is doing now. This is going to happen no matter what he does in just another year or two. Having said all that, the tariffs have to be lower than what we're seeing now. And they will be. 10% would probably have been a great number that everybody seems to feel is sustainable, but it's likely to be more than that on average, but probably less than 20%. The knee-jerk reaction of the Thursday, Friday, and early morning today sell-off is going to correct as these tariffs are modified during this week. And this dramatic sell-off is a panic sell-off. It is a silly knee-jerk reaction, and I'm guessing this is going to sound crazy, but write it down. This is not going to take 3 months or 5 months to correct back to where we were. It's not going to take 3 days either, but it's going to be way faster than any other correction from a drop this dramatic. The reason is because of the shape of the correction. We needed this correction. Of passing interest is that even these tariffs are only causing economists to predict a 60 to 70% chance of recession. I find that pretty interesting. Think about that. All of this panic. And right now, the major economists are saying, well, there's a 60% chance of recession. Remember that just a couple of years ago, 3 years ago, they were 100% thinking we were having a recession. That sort of happened, or maybe it didn't happen, or maybe it did. Anyway, here's what Jamie Dimon said this morning in the Wall Street Journal is quoting him. In his annual letter to shareholders, the J.P. Chase chief executive said that tariffs are likely to drive up inflation on imported goods and domestic prices, with input costs rising. Whether or not the menu of tariffs causes a recession remains in question, but it will slow down growth. So even taking into consideration where the tariffs are right now, Jamie Dimon is not absolutely saying we're going to have a recession. Finally, in my analysis today, the market needed the correction. I've been saying this for 6 months. Corrections are good. You have to have them. Moreover, the recessions are also necessary and useful. Hard to hear, I know, but that's from someone who's written a book on recessions. And the correction, 10 to 20% correction that I've been talking about for 6 months, we had the PE for the S&P at something like 24. That can't continue. Jamie Dimon will have more to say about that later in my discussion. President Trump this morning said the United States has a chance to do something that should have been done decades ago. He says, don't be weak. Don't be stupid. Don't be a panicking. He says that's a new party based on weak and stupid people. Be strong, be courageous, and patient, and greatness will be the result. I'm all in, President Trump. I believe you are correct. I reported on Dan Ives' price cut on his price analysis of Tesla last night. I think he's wrong this time. I generally like what Dan Ives has to say. I think he's wrong. By the way, he cut his price target, but it's still super high, and he's still saying that Tesla's a buy. So don't forget that part. Anyway, this is from Logic Blade this morning. I love this. He says the proper frame for POTUS should be to use the mantra global shared prosperity. He should say that what we're shooting for is global shared prosperity. I love that. He was taking that based on some of the things I had said. He then gave it a headline. I think he's right. President Trump, you can use that. I think it'd be okay with Logic Blade and me if you just started to talk about we're shooting for global shared prosperity. Teslarati has this morning. Tesla has officially started rolling out a new version of the insurance program Safety Scores Beta, improving upon a few different metrics that make up the index. As detailed on the Tesla Insurance website, the company has updated its safety scores to Beta version 2.2. The update primarily includes improvements to how excessive speeding is measured, along with the removal of forward collision warnings from the formula. Tesla has slightly increased the values of related factors such as hard braking and unsafe following in this new formula, perhaps in an attempt to help accommodate some of the situations previously covered by the FCW rating. Don't know what that is. Anyway, Tesla safety scores are used to determine premium rates for buyers of the company's insurance. At this time, Tesla insurance is available in only 12 states. Sadly, we haven't seen that increase very much, but as I've reported here and will continue to report, Tesla insurance is going to be going away because in a couple of 3 years, it's going to be a robotaxi world. And I'm not 100% sure at this point. I've really been thinking about this a lot. I'm not 100% sure that in a couple of years, Tesla will be even selling cars to consumers. They will all either go into Tesla's fleet or into other people's fleets. I'm pretty sure that's what's going to happen. My view of the current situation, we are currently in uncharted stock market territory. The widely cited examples from the 1930s. Oh, I'm sorry, this is AJ. How did I miss that? This is not my view. This is AJ's view. We are currently in uncharted stock market territory. The widely cited examples from the 1930s do not apply due to how global trade and other factors have changed global market practices. It's a completely different, there's Smoot-Hawley it's not even close to applying. In fact, in many cases, it's the flip of how things were back then. What happens next is primarily driven by XAI's next move. I'm sorry, what by XI, I'm not sure what he means by that. Oh, by what Xi does. Okay, primarily driven by Xi's next move. Okay, that's what he's saying there. Okay, regarding Xi's China, a few thoughts. Trump is unlikely to change his position soon unless he gets something from China in return. 100%. The risk is that Xi gambles on Trump losing enough support to see the strategy through, or she gambles on cutting a more favorable deal with the next administration. Obviously, this would create enormous tensions for the next 4 years, and there is uncertainty whether a subsequent new administration will be open to a more China-friendly deal. She knows that the U.S. cannot be replaced as China's main customer in the short, medium term, but also knows that China had to decouple that China has to decouple from the U.S. This decoupling has been underway for several years. Well, that's both sides. They're decoupling on the economic side. The U.S. is decoupling in terms of how much they buy from China. China is not in the strongest position. The country is plagued by various bubbles, for instance, real estate, and very high youth unemployment and very few youth compared to their aging population, which is also shrinking. She knows that risking a significant economic downturn in China, something the communists have not experienced in decades, is a risk that may not be worth taking. Bottom line, all this makes for a highly uncertain environment. We could see a scenario where China cuts a deal with the U.S. quickly, and we see a market recovery. A market recovery not to previous all-time highs, but an end to the bleeding. I've been saying all along, I think we recover to the 10% level on the 10% down level on the S&P. Uncertainty, which is often much more damaging to equities than subsequent reality, is dragging on, and worst case, rhetoric and retaliatory measures increase. Compared to other corrections, this market correction is different in the following ways. Number one, the dot-com bubble outrageous valuations, solution price corrections. Two, financial crisis, toxic securities contaminating global asset pools. This time, in that case, the toxic securities had to be identified, written down, and separated. And then COVID crash, health risks to population had to be understood. Wasn't nearly as bad as feared, and economies had to normalize. This current crisis requires a reset to global trade relations and to government spending and to government, deficits, U.S. government deficits. The U.S. cannot afford any of that any longer. How long it will take for key parties to accept the new reality and when they can find a compromise is anyone's guess. Then this from Søren Basher. Should trading partners play by the same rules, he asked. Okay, let's take a sports analogy. Imagine the World Cup, but absurdly unfair. Every team plays by different rules. For the U.S. team, refs shrug off brutal slide tackles from opponents, yet whistle American players for a gentle brush. Penalty kicks. U.S. players hop up on one leg to the ball, and when defending, the U.S. goalkeeper has to fumble blindfolded. Some matches, they got their hand tied behind their back. Others, no jumping allowed. Coaches banned from the sidelines. The other teams use performance-enhancing drugs, while the U.S. players are banned if they use mouthwash. The other teams are allowed twice as many players on their bench. If other countries win more matches under these lopsided rules, would anyone call it a fair victory? Of course not. It's a rigged game. Now think of the international trade as an economic competition. Shouldn't all nations follow the same playbook? When one country slaps high tariffs on U.S. goods, throws up non-tariff barriers like customs delays, red tape, quotes, subsidies, import licensing requirements, onerous regulations, currency manipulations, then floods our market with their exports while blocking ours, it's not free trade. It's a stacked deck. Now, here's one place I'm going to just take a slight detour from Søren's analysis, but the United States loved every minute of it. We loved getting the cheap goods. Don't ever forget that. It's not all on one side. Just like I keep saying about 2008, The borrowers were just as guilty as the lenders in 2008. The United States is just as guilty as sucking at these, getting these amazing deals and wanting to get more and more cheap goods. 100%, both sides. Takes two. So, Larry Summers, bilateral deficits are a sign of a country is exploiting us if that country isn't engaging in true free trade. If they impose higher tariffs than we do, and if they have various non-tariff barriers, that effectively maximizes their exports and reduces the imports of U.S.-made goods. Oh, then he says, to be fair, the U.S. isn't spotless. We employ many non-tariff tricks. For example, we subsidize farmers. We have import quotas. We use embargoes and sanctions, and we use Jonas Act restrictions on the maritime rules. One thing pretty for sure, we don't have free trade in the world today. The game may not only be stacked against the U.S., but the balance, it does appear to be rigged. So all that's true, and all I'm going to say is that unrigging it is going to have some bad days. It's going to be rough. Did you grow up in a time when you had tincture of methylate for your cuts, and you had to take what was that stuff called that you had to drink? I'm forgetting now. I'm getting old. Okay, this is Randy Kirk. If you liked anything I just said, maybe you didn't like it, but you knew it was right. Or maybe you just thought that was valuable information to add to the pie of my knowledge, to add to the overall knowledge that I'm trying to get with regard to what's going on right now. Please hit the like button, hit subscribe. Why haven't you subscribed? Okay, subscribe now, and then hit notify, as Larry Goldberg will be here later to help me figure all this out and tell me where I'm completely wrong, or maybe sometimes where he thinks I'm right. And then we'll have Brian White on at 7:45, assuming all things are equal. Aaron Rupert says this morning, he says, I don't know who Aaron Rupert is. I've never quoted him before. He goes under the handle A Trooper, ATRUPAR, if you want to follow him. Trump says, I spoke to a lot of leaders. This is right now. This is immediate. This is like coming out right now. European, Asian, from all over the world. They are dying to make a deal. But I said, we're not going to have deficits with your country. To me, a deficit is a loss. We're going to have surpluses, or at worst, we're going to be breaking even with you. So let's figure out how we can move toward that direction. I added that part. Trump didn't say it. That's what he's saying is, let's talk. And let's figure out how we can move towards a situation where each and every country in the world is moving towards breaking even. Kobesi letter says this morning, breaking Commission President, breaking news, European Commission President von der Leyen says the European Union is ready to negotiate with the U.S. on tariffs. This is from Market Watch. The CEO, here's Jamie Dimon again. The CEO of the largest bank in the United States warned that even with the bruising two-day sell-off in financial markets, listen to this, prices remain relatively high. Oh, Randy, this is what you've been saying for 6 months. It is worth noting, he says, that we enter this time of uncertainty with high equity and debt prices, even after the recent decline, Dimon said. No matter how you measure it, equity valuations are still well above their historical averages, and the credit spreads are still near the low end of the same ranges. Prices of these assets have been based on the expectation of a soft landing in the economy, and the Fed started cutting interest rates. Dimon says he's not so sure now that the economy will avoid a recession. All of these crosscurrents and turbulences may take years to play out, he said, or maybe not. Dimon's comments on this, his closely watched yearly missive, his letter to his stockholders, which clocked in at just under 60 pages this year. Last week, the bank's forecasters lifted their recession forecast to a 60% chance in the wake of Trump's latest round of tariffs, which were met Friday with retaliation from China. These significant and somewhat unprecedented forces caused us to remain very cautious, Dimon said. Dimon also said that the tariffs are causing many to consider a greater probability of recession. He expanded on themes from his 2023 letter about the greatest challenges to democracy since World War II and an increasingly complex geopolitical situation. The U.S. needs to work closely with its allies to face economic and political challenges from around the globe, he said. We need to remain competitive with China in in artificial intelligence. AI, the AI, the artificial intelligence race, I'm sorry, we need to remain competitive with China in the artificial intelligence race by bolstering our technological advancements, reducing our reliance on Taiwan for semiconductor chips, Dimon said. Overall, I believe that respectful, strong, and consistent engagement would be best for both the United States and China, as well as for the rest of the world. Of course, that would, Jamie Dimon, you're 100% right. Anyway, let's find out how markets are responding. They were going up. They have peaked now and are moving down a bit, but we're still at this point at the Dow Jones is only down 1.99%, okay, which it was down 5. So, but it is trending down again. This is not exact. I wouldn't call this the dead cat bounce yet. This would be a correction of the correction, momentary, like a half an hour of correction so far today. So what will all this be looking like later? Well, for instance, Amazon is up right now 1.36%. That gives you a clue that maybe by the end of the day we could be in the green, and it'll be heavily news driven at this point. The technicals will matter, fundamentals will matter, but right now this is a news driven market. Panic, tremendous panic going on. This morning, the VIX was back and forth between 45 and 48%. That's panic. What do you do in panic situations in the stock market? Buy, buy, buy. Okay, Tesla is down 5.34 this morning at 226. 226 is about where I would have anticipated we would be without this macro, just with the missed numbers. You may remember me saying this. I was shocked that we held up there in the 250s, 260s. And not at all surprised that we're now sitting, actually just changed as I'm sitting here. We are now at $230.81. The Dow Jones is now only down 1.7%. I'm telling you, huge volatility. The NASDAQ is down only 0.75% this morning. S&P only 1 point, whoops, wow, this is changing so fast. It's unbelievable. The NASDAQ is now only down 0.26%. The Dow Jones is only down 1.51%. The S&P is only down 0.89%. Tesla is only down 3% at this point. It's now at 232. It's Magnificent Seven. NVIDIA is up, Meta is up, Amazon is up, Google is up. Now we're starting to look like there's two or three kinds of ways you can call this. You can call it a dead cat bounce, which would mean that it's only because a bunch of people, bottom fishers came in, bargain hunters came in and started buying, but it's not really going to impact the fundamentals. You can call it a relief rally where it's kind of the same, but where people are saying, the bottom's probably in, or it's not going to get much worse. Or you could say what I just said a minute ago, it's strongly news driven. And right now the news is looking a little better. And the market is just changing every second. I can't really remember seeing the Dow, the NASDAQ, and the S&P just kind of jump around like this. The NASDAQ is almost positive, only down 0.08 at this point. We'll come back to this in a minute, okay? The Cathie Woods now are also mixed, so we are heading toward the green. Probably, not 100%, but we're probably headed towards the green. But it may not last. I'm telling you, it may not last. And who knows, I may be missing news right now that is explaining some of this. All right, let's go into the bonds. See, the bonds led this off this morning. The bonds were under under 4 at 3.90 last night. They're now back all the way to 4.123 on the 10-year. That's up 13.2 basis points. They are leading this recovery. And I think the rest are following. The 2-month is up 2 basis points, and the 2-year is up 4.3 basis points. Okay, just looking at a headline there, sorry. Let's go ahead and look at oil. Oil, which was also way down overnight, is now slightly up. I mean, it's still at 62, which that's wonderful. I like it being at 662. Brent at $65.53. Natural gas up a little, also 0.10 at 3.839. Interesting. That's recovered quite a lot from where it was last night. Gold is now down a tad, $3, sitting at 3,032. Silver up 3.23, over $30 again. It had dropped under $30. Copper down 1.76, but still way up from where it was last night at 4.32. The dollar is mostly down, but it's kind of, well, it's mixed. It's mixed. It just changed again. It's not changing so fast. Bitcoin down 1,274 at 78,177. And that's recovering a little bit from where it was. It was in, I think, 77 and change earlier. Okay, so we got that. All right. So the NASDAQ is in the green. I'm telling you this. What did I say? I started off this whole thing just 25 minutes ago, saying volatility would be the key today. Okay, you've got the S&P unchanged now. You got the NASDAQ 40 points up, 0.13% up, and you've got the Dow only down 567 at this point. S&P just dropped back into the red a little. Okay, let's go back just for fun and look at Tesla. We'll keep this open and look at it again. Okay, it's back down to 5.84 down, which is a big multiple. Well, that's a 3%. That's a little more than 3 times multiple now of the NASDAQ, which has fallen back into negative territory. You can't make this up. Okay, so later on today, Larry Goldberg at 4:35-ish. Brian White at 7:45, all things being equal. And last night, 100%, you want to go back and take a look at both of the Brian Wong story that I did last night, as well as my own Friday night or Monday morning show. I'll put both of those cards up. Both of those, the Monday morning show got massive numbers of views last night. I think there's a reason for that, and you might want to go. If you didn't look at it last night, I think it's still going to be a valuable thing for you to go check out. Okay, I have to look one more time. Okay, we're moving back up again. We'll see what happens as the day progresses. I will see you later today. It has been great talking to you.